Jump over to the yield market, TNX. This one has clearly peaked as we're seeing it sell off quite sharply on CPI, down about 1.35 or 3% to 4.269 on the yield. We have a low that is due 826 to 1021. This is probably the most interesting market we are looking at. We did highlight on Tuesday the likelihood of a peak as well in yields and what that may mean for U.S. home construction stocks, given the what is currently a fairly negative correlation between yields and the ETF that we look at, which is the ITB. Again, if you haven't seen that video, please go ahead and watch it. That's the stock sector's U.S. home construction ETFs video that we did on Tuesday, 610. Right now, we're seeing here in the TNX market likely a series of lower highs and lower lows that are due to form. If this can somehow move through that old high at 46.38, that's 4.638 on the yield, that would say that a late minor low has formed. But absent of that, again, this minor low has likely turned down. This dominant cycle has turned down. So we're getting into a riskier time period here for the 10-year. There's a 61.8 at 4.148, 78.6 at right on 4%. Those are our downside targets. Jump over to the daily chart. A daily low that is due here, 621 to 71. You will note, if we draw our fibs based on how we would normally draw them, from swing high right there to that minor low that formed right there, we failed right where we should have, the 38.2 to 61.8. We did not move through the 78.6 at 4.561, right? We failed between 4.415 and 4.5%, and then got the sell back down. That's really how this should be acting based on the current cycle structures. So that's why there hasn't been any change that has needed to happen here in terms of the placement of the cycle brackets.